When you talk to clients, what are the biggest challenges they're facing right now in staying compliant with Italian and international tax rules?
The number one challenge I see every day is the difficulty of keeping up. Regulations change frequently, guidance is not always clear, and overlapping deadlines make it hard for businesses to feel truly confident about compliance. For companies operating beyond Italy, this is compounded by the complexity of international rules, VAT, transfer pricing, and the global minimum tax, along with the fear of making formal errors that can be costly in terms of penalties, reputation, and time lost to audits and clarifications.
If you had to summarize the tax environment Italian businesses are operating in today, what stands out the most?
Today, Italian businesses operate in an environment that is both highly digital and highly complex. More data is being transmitted to the tax authorities with increased cross-checks, alongside layered rules that are not always linear. This means that simply filing a correct return is no longer enough. Companies need solid internal processes because every electronic invoice, electronic payment, and tax incentive claimed leaves a trace and may be subject to review.
Digital reporting keeps expanding every year. As we head into 2026, what should companies realistically be preparing for?
Between now and 2026, companies must prepare for a significant shift in digital reporting. More automation, less paper, and almost no room for last-minute adjustments. In practical terms, this means investing in systems that communicate with each other, ERP, invoicing, treasury, ensuring data is clean and well-structured from the outset, and being organized so that new requirements from Pillar 2 to increase transparency for international groups find the company ready rather than scrambling to catch up.
We're seeing tax and sustainability crossover more than ever. How are clients approaching this, and what are the practical conversations you're having with them?
For many businesses, tax and sustainability are no longer separate worlds. Green incentives, environmental taxation, and the expectations of banks and investors are bringing tax considerations directly into ESG strategies. Our discussions with clients focus on how to present their tax position transparently in sustainability reporting, how to structure supply chains consistently with environmental objectives, and how to avoid tax and ESG communication that appears inconsistent or lacks credibility in the eyes of the market.
When business owners talk to you about compliance, what are the biggest misunderstandings or worries you find yourself helping them unpack?
Many entrepreneurs experience compliance with a mix of anxiety and resignation. They see it as costly bureaucracy to be endured and often believe that planning automatically means entering gray areas. In reality, our work is about clarity, explaining what constitutes real risk and what does not, how to use available incentives properly, and how to structure the business so that audits feel less intimidating, even when operating across multiple countries or facing customs duties, EU rules, and cross-checks.
Looking ahead, what mindset or approach do you think Italian companies need to adopt to stay confident and prepared in this new compliance environment?
The mindset companies need today is one of leading compliance rather than being subject to it. Tax, digitalization, and sustainability should be treated as integral parts of the business plan, not merely costs or obligations. This means fostering ongoing dialogue between the entrepreneur, CFO, and advisors, implementing simple, clear procedures for internal teams, and using technology to maintain control and visibility, allowing businesses to approach each new reform calmly rather than in a constant state of emergency,